Oh, welcome in to another daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, we usually talk about specific price moves when it comes to gold and certain things like GDX and GDXJ, but quite frankly, these are slow right now. And I think a lot depends on some other markets in terms of where the precious metals are going to go. First and foremost, looking at the 10-year, it looks like the 10-year top just short of that 2% level and has now started to trend down, albeit fairly slowly. Obviously, precious metals do better when yields are lower and moving lower. What's your outlook, though, for the yield environment here in the U.S.?
Okay, Corey. Well, as we know, we've had a little bit of a rebound in bonds, but if we go back and just look at the last month or so, this rebound in yields has kind of faded. It's kind of rolled over. Well, I should say it looks like it has rolled over, especially in the longer term yields. One thing to note is that the rebound, it was weakest in the 2-year. So the weakest, the weakest rebound was in the 2-year. You had more of a rebound in the 10-year and the 30-year, for example. However, I mean, just looking at what's happened at this stuff recently, they've clearly started to roll over, or they have rolled over, especially with regards to the 10-year, which coming in today it was below 2%. And now looking at the chart, Corey, the 2-year wasn't even able to surpass 2%. There's a lot of resistance there right now because you have the 200-day at 196. That's declining. That's interesting. And also I know we're going to get into the dollar, but the rebound in yields, that started around the time the dollar peaked. So with regard to precious metals, we have to remember precious metals actually peaked around the time that the dollar bottomed. So a higher dollar, a lower dollar can mean higher interest rates, because a lower dollar tends to be more inflationary. And it's just interesting how the reverse is actually what the catalyst for gold was. So as far as gold, if these bond yields, Corey, if they don't go any higher from here and they continue to roll over, that's going to force the Fed into cutting rates again at some point. And that would also, I know we're going to get into the dollar, but a stronger dollar that tends to put a little pressure on the stock market. That also puts downward pressure on yields. So it's kind of counterintuitive with respect to gold. But, if those factors reemerge, that's one bullish catalyst for gold specifically. That kind of catalyst is more bullish for gold than silver, although it is bullish for the entire sector.
Okay, so when it comes to still sticking with the 10-year, do you see the 10-year dropping back to some of those lows that we saw, say, in September, where it got below 1.5%? Do you see that type of a move lower for yields?
I don't, that's hard to say. I mean, the chart looks really weak, but it's definitely possible it could retest that low around 1.50, or definitely a little bit below, like the low it made in the middle of 2016. So it's definitely possible, but I'm not sure if it's going to crash below that. I don't know if the economy is weak enough. I don't think it's weak enough for that to happen. I mean, I don't know if there's something in the repo market that would force that or not. I'm hesitant to kind of forecast, but what we can say is this rebound looks to be fading, and we have to be on alert if it continues to roll over.
Okay, now to the US dollar, which the argument can be made that the dollar is starting to roll over as the successive streak of higher highs and higher lows was broken in the last about 4 months. Do you see a significant decline here coming for the US dollar, which recently bounced right at that 96 level, currently trading right around 97.5?
Yeah, I mean, Corey, the dollar's at a very interesting juncture. I mean, we talked about it coming into the year. It was starting to break down, and then really the first quarter or so could give us a hint as to if this is going to do a complete rollover or if it's going to stabilize. And Corey, right now it's stabilized. It's had a good little rebound a good rebound from the 400 day, which is sloping up. And if you draw trend lines from all the lows in 2019, the recent low bounced off that trend line. So pretty good bounce, but it has come to an area here in the mid 97s where there's a confluence of strong resistance. You have the 50 day, the 200 day are in the mid 97s. So this is a critical area for the dollar, because if the dollar were to weaken and then roll over and basically fail at that resistance, that would be quite bearish for the dollar. And then there's inflationary implications for that. It's bullish for commodities, bullish for emerging markets, etc. However, if the dollar were to punch above this resistance and strengthen and rally to the 98s, that could start to put at some point pressure on the stock market. Maybe that forces the over bullish stock market to correct, which it's in badly in need of a correction right now. So that's the other scenario, and that's what we were talking about before for gold. Like if the dollar doesn't roll over and it strengthens and pushes above resistance, then that is going to probably pressure bond yields lower, which from that side of the coin is bullish for precious metals, or bullish for gold specifically, because that probably means the market starts to price in another Fed cut. So there's several balls in the air here, Corey, and the dollar is definitely a key. Because it does impact the stock market as well as bond yields. So, if you're looking for the next potential catalyst for gold, I would watch those markets. And it's hard to say exactly what is going to happen. Before I was kind of leading to the inflation side, dollar rolling over. But now, the dollar had stopped rolling over, has had a decent rally, even though it is at resistance. If you look at the bond yields, those look pretty bearish, like they're going to go lower. So that's something to keep in mind. So, maybe that's going to be the catalyst. Either way, I can't predict the future, but I like how things are setting up for precious metals. We just have to continue to be patient here as the market consolidates. And, it may just need more time to consolidate before it tries to make, and I think successfully, a big move higher with respect to the miners.
Well, that's a key there. Even just a little bit of sideways movement, continuing to put in this at least short-term base at 1550, I think is encouraging. And yeah, if that dollar breaks down, then inflation comes back on the table, and just naturally the precious metals prices in US dollars do rise, considering we have seen precious metals prices in other currencies break to some even all-time highs. Now, one final comment when it comes to the yield environment, when it comes to the US dollar, how crucial is Fed policy, future policy, going to be in determining the direction of these two markets?
Well, we have to remember the Fed follows the market, so it's kind of a misnomer that they set policy. I mean they do, but in reality, they're following the market, because remember, the 2-year yield was plummeting before they even after that last hike that they did. So, yeah, because of that, I would say the market itself is more, it's of course it's more important than the Fed, but we'll have to see what happens, because if bond yields continue to roll over and you get the 10-year, going down towards 1.5, the Fed's going to have to cut a couple times because they don't want the curve to get inverted again. And in that scenario, the 2-year is probably going to be going lower anyway. So, yeah, I don't know if I could string out a short answer, but I would say, honestly, the Fed, they're not that important, because they're going to follow the market. So keep your eye on the 2-year and the 10-year as far as what's going on there, and that's going to be your tell. And also the dollar, as we said before. Look, if the dollar were to break down, it fail at this confluence of resistance and break lower, that could keep the Fed in pause mode for a while. So yeah, that's one scenario. And then the other scenario is bond yields keep going lower and they're forced into cutting. So they're going to follow the market. They'll be watching the dollar and bond yields to figure out what's the right move.
All right, Jordan, we're going to wrap it up there. Interesting comments, and I think always important to look at some of these other markets when it comes to future moves in precious metals, because these other markets, they're larger, and quite frankly, they do drive at least some of the short-term price moves and overall money flows. Interesting, though, or it will be interesting to see if we continue to get this safety or safe haven type of move into U.S. Treasuries and gold. Let's see how the rest of this year progresses. Jordan, great chatting with you. Everyone click that link below. Go visit Jordan's website, The Daily Gold, and follow along with his precious metals commentary. Thanks for your time, Jordan.